Borrowing money can be a big help. It can help you buy a house or a car. It can help you pay for school. But borrowing comes with a big responsibility. You have to pay back what you borrow. This is called debt. Not all debt is bad. Using a credit card responsibly can build your credit. Paying off a car loan on time shows you're reliable. But if you don't pay back your debts, things can get tough. This essay will explore what happens when you don't pay your loans. We'll talk about different types of loans. We'll look at the consequences, and we'll discuss ways to get back on track. Remember, taking control of your finances is key to a brighter future. Let's talk about different types of loans. First up, credit cards. These let you borrow money for everyday purchases, but they come with high interest rates. If you miss payments, those rates can skyrocket. Next, we have student loans. These help you pay for education, but defaulting on them can have serious consequences. You could face wage garnishment. This means money is taken directly from your paycheck. Personal loans are another type. These are often unsecured. This means they aren't backed by collateral like a house or a car. Missing payments on these can hurt your credit score. Finally, there are mortgages. These are loans used to buy homes. If you don't pay your mortgage, you could lose your home to foreclosure. This is a serious situation no one wants to face. What happens when you miss a loan payment? First, you'll likely be hit with late fees. These are extra charges added to your balance. Late fees can add up quickly, making it even harder to catch up. Then there are higher interest rates. Many loans have penalty rates. This means your interest rate goes up if you're late on payments. This makes your debt grow faster. Your credit score will also take a hit. Your credit score is a measure of your creditworthiness. It tells lenders how risky it is to lend you money. Late payments are reported to credit bureaus. This lowers your score and makes it harder to borrow in the future. Ignoring your debt won't make it go away. In fact, it can make things much worse. Over time, unpaid debt can lead to a severely damaged credit score. A low credit score can affect your ability to rent an apartment, get a car loan, secure a credit card, or even get a job. You'll also start getting calls from debt collectors. These are companies hired to collect unpaid debts. They can be relentless in their pursuit of payment. They may call you constantly and even contact your friends or family. In some cases, lenders may take legal action. This could mean a lawsuit or wage garnishment. They may even try to seize your assets to cover the debt. It's a stressful and overwhelming situation to be in. Section 5. Life in the red. How unpaid loans impact your quality of life. Unpaid debt doesn't just affect your finances. It can have a significant impact on your overall well-being. The constant stress and worry can take a toll on your mental and physical health. You may experience anxiety, depression, or even physical symptoms like headaches and insomnia. Your relationships can suffer too. Financial stress is a common source of conflict in relationships. It can lead to arguments, resentment, and even separation. Your ability to provide for yourself and your loved ones can be compromised. With limited financial options, it's harder to cover basic needs like housing, food, and transportation. You may have to make difficult choices that impact your family's quality of life. Section 6. Picking up the pieces. Strategies for debt repayment. If you're struggling with debt, know that you're not alone. It's a common issue that many people face at some point in their lives. Millions of people face similar challenges, and it's important to remember that there are solutions available. The good news is that there are ways to get back on track. With the right strategies, you can regain control of your finances. The first step is to face your debt head-on. Acknowledge the situation and take proactive steps to address it. Ignoring it will only make things worse. It's crucial to confront the issue directly and seek solutions. Contact your lenders and explain your situation. Open communication can lead to more favorable outcomes. They may be willing to work with you to create a payment plan you can afford. Many lenders are open to negotiation. Don't be afraid to negotiate. You have the right to ask for terms that are manageable for you. You have nothing to lose by asking. Consider debt consolidation. This can be a useful tool in managing multiple debts. This involves taking out a new loan to pay off multiple debts. It can streamline your payments into one monthly bill. This can simplify your payments and potentially lower your interest rates. However, it's important to do your research. But make sure the terms of the new loan are favorable. Explore debt settlement as another option. This involves negotiating with creditors to pay a lump sum that's less than what you owe. It can be a viable solution. This can be a good option if you can afford a large payment but can't manage monthly installments. Weigh the pros and cons. However, it can also negatively impact your credit score. Seek credit counseling for professional guidance. A credit counselor can help you create a budget, negotiate with creditors, and develop a plan to get out of debt. They offer personalized advice. They can also provide valuable financial education and support. With the right help, you can navigate your way out of debt. Section 7. Staying afloat. Tips for avoiding debt and securing your future. In this section, we will explore practical strategies to help you manage your finances effectively. Prevention is always better than cure. Taking proactive steps now can save you from financial stress later. Here are some tips to avoid debt and build a secure financial future. Create an emergency fund. This fund acts as a financial safety net. Having 3 to 6 months' worth of living expenses saved can help you weather unexpected financial storms without relying on credit cards. This cushion can be a lifesaver in times of need. Automate your savings and bill payments. Setting up automatic transfers ensures you save consistently. This ensures you're consistently saving and paying your bills on time, avoiding late fees and potential damage to your credit score. Live within your means. Avoid overspending and impulse purchases. It's important to distinguish between needs and wants. Track your expenses and create a budget that aligns with your income and financial goals. A well-planned budget can guide your spending and saving habits. Check your credit report regularly. Monitoring your credit helps you stay on top of your financial health. Make sure there are no errors or inaccuracies that could be hurting your credit score. Correcting mistakes can improve your score. You're entitled to a free credit report from each of the 3 major credit bureaus annually. Take advantage of this to keep your financial records accurate and up to date. Section 8. When to call for backup. Seeking professional help with debt. Sometimes, tackling debt alone can feel overwhelming. The stress and anxiety can make it difficult to see a clear path forward. Don't hesitate to seek professional help when needed. Reaching out for assistance is a sign of strength, not weakness. There are numerous resources available to guide you through the process and provide the support you need. These professionals are trained to help you navigate complex financial situations. Debt management programs. These programs work with your creditors to lower your interest rates and create a manageable payment plan. They can consolidate your debts into a single monthly payment. They can be a good option if you're struggling to make payments on multiple debts. By simplifying your payments, you can regain control over your finances. Bankruptcy. This is a legal process that allows you to discharge or reorganize your debts. It can provide a fresh start, but it comes with long-term consequences. It's a last resort option that should only be considered after exploring all other possibilities. Make sure to consult with a bankruptcy attorney to understand the implications. Financial counseling. A financial counselor can provide personalized advice and guidance on budgeting, debt management, and other financial matters. They can help you create a realistic budget and stick to it. They can help you develop a plan to achieve your financial goals and avoid future debt problems. With their support, you can build a more secure financial future. Section 9. The importance of early action. Don't wait until the walls close in. The sooner you address your debt, the better. Delaying action will only make the situation worse. Interest rates will continue to accrue, late fees will pile up, and your credit score will suffer. This will make it even harder to get back on track. Remember, seeking help is not a sign of weakness. It's a sign of strength and a commitment to taking control of your finances. There are people and resources available to support you every step of the way. Section 10. Conclusion. Taking control of your financial well-being. Managing debt responsibly is crucial for your financial well-being. By understanding the consequences of unpaid loans, you can make informed decisions about borrowing and repayment. If you're struggling with debt, know that you're not alone, and there are steps you can take to regain control. Remember, your financial health is in your hands. By taking action, seeking help when needed, and adopting responsible financial habits, you can build a brighter financial future for yourself and your loved ones.